Shares of insurance tech company Lemonade trading lower today, down around about 3.7%. It's been a roller coaster ride for investors since the company's IPO last year. The stock rose to a high of $188 back in January, now trading around half that level, but of course still up sharply, 200% or so since the IPO. The company balances purpose and profit as a certified B Corporation and recently announced it donated more than $2.3 million to 65 nonprofits for the 12 months ending June 30th. Lemonade CEO Dan Schreiber joins us now. Dan, good to see you. Thanks so much for joining us.
Good to be with you.
So clearly down a little bit off the back of the results, but up sharply since IPO, as we've discussed. What's been the main pushback from investors today to the numbers?
No, we didn't actually publish numbers today. We will be issuing our numbers in a few days' time, so we're in our quiet period, so I won't discuss those results. What we did publish is exactly what you spoke about in the introduction, which is we had our Give Back, which was a seminal event. It is every year, a seminal event in the calendar of the company with some $2.3 million going to a bunch of charities. And the way our company works is that when customers buy insurance at Lemonade, they designate a non-profit that's near and dear to their heart. And then once a year, if there's money left over, if the results have been good, if the claims have not exceeded certain thresholds, then we're able to give whatever money's left over to a non-profit that is near and dear to the hearts of our customers. That's really the big news for us in the last few days.
So do you think was this number out there already? Was it expected? Was it a bigger giveaway than expected? And do you think investors welcome this generosity?
Yeah, so we've been doing this now. This is our 5th year in a row with a Give Back, and it's actually grown 4,000% over the course of those years. So it has been growing very steeply. Just this year over last year is over 100% growth. And I do think it's welcomed by our investor community. I don't think there's anything meritorious about giving away money from your investors. In other words, if we just raise money from investors and give it away, I don't think that's a particularly wonderful thing to do. But in our case, it's different. This isn't just us being generous with our investors' money. It's really building value for investors. And one of the premises upon which Lemonade is built is that we could change the business model of insurance. And actually, we could use Give Back and nonprofit to solve a business problem that is indeed near and dear to the hearts of our investors, which is that this is an industry that is plagued by distrust. So tens of billions of dollars a year go in fraud, insurance fraud, which is not committed by some criminal gangs overseas. It's people like you and me who, for some reason, when it comes to insurance, feel entitled to embellish our claims. And as we founded Lemonade, we really wanted to contend with that issue. How do you build a trusting and trustworthy brand in insurance that would elicit a different kind of behavior from customers to the benefit of consumers, the company, and its shareholders? And our Give Back is a central plank in that strategy.
So as you've continued to grow, Dan, how much of your new customers are first-time younger insurance buyers, and how much are you getting from some of the bigger guys, the old school competition?
So historically, we've published the number that something like 90% of our customers are first-time buyers of insurance, which is a pretty stunning number when you think about it. We don't have reliable data on this, but in terms of the new cohorts of insurance buyers, I think we might be the #1 brand in the country, maybe #2, but we're really up there in terms of our market share among the new cohorts, which I would put to you is the most predictive number you could have in terms of long-term market share, right? Because rather than fighting to take a customer away from an existing insurance company, what we're really focused on is how can we get the next generation of customers, and we are thinking about the long-term growth of our business. And I think that bodes very well indeed. But in the last year, since our IPO, which you just referenced, which was early July of last year, at our IPO, we only had one product to offer, which was homeowners insurance. And since then, we've added pet insurance, and we've added life insurance, and we've announced that car insurance is coming. So we are now seeing for all of those customers, both existing customers of other insurance companies who are switching to us and newcomers, multiple points of entry into Lemonade and multiple crossover paths. They buy one product, but then they add others. So we've seen a lot of the dynamics of our business change for the better over the course of the last year.
Shepard Smith here. Thanks for watching CNBC on YouTube.